Hello, Brian here, quantlabs.net, 1 p.m. Eastern, April 20th. So today, another podcast. This one was inspired by how to beat a recession or what to look for. Here's another one, but this is specifically, it's from Forbes. Title is The Best REIT, that's Real Estate Income Trust, Best REIT Dividend for a Recession. So I'm gonna go through this, and a lot of people obviously are worried about the markets, the recession coming on. People could be unemployed, people could lose their careers, da 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 da, all this negative stuff. So this one is actually useful. So let's get to it. Worried about a recession? Two thoughts. I don't blame you. Consider this recession resistant REIT. Again, real estate investment trust poised to rally on an economic slump. Why rally? Interest rates on REITs tend to seesaw. When rates rise, REITs fall. At least that's the conventional wisdom. Uh, Recessions, interest rates fall. Normally bullish for REITs. Consider them a second level bet on a bond bounce. So let's talk about owning physical real estate versus these type of investments. I like them because they're highly liquid, and yet you can still benefit from real estate without having to go out and own. In some cases, you know what I'm talking about, owning buildings and having tenants and all this cash flow. And here we're talking about real estate could could blow up or a credit crunch, da 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 da. And a lot of that's levered because, well, you have loans and mortgages put out on those buildings. So we are entering into a very different time frame. And let alone if you're a landlord, just even in your own home with a tenant, um, are you okay with wanting to fix toilets at 3 a.m.? So that's a question you need to ask yourself, as I said, when you can somewhat get the benefits of these REITs. REITs, after all, are bond proxies of the stock world. Investors buy for their yield. Bet on, sorry, that's why we like them here at Contrarian Outlook. So that's the provider on this author, this Forbes article. In part, REIT special sauce. As long as they dish most of their profit, 96% as dividend, they pay no corporate tax. Good riddance, double taxation of dividends. Who thought? Who knew? I don't know how it is in Canada, but this is obviously going to be US focused. Rough ride for the sector lately. Since the start of 2022, the Vanguard Real Estate ETF, VNQ, is down 28%, even after accounting for dividends. Yikes. This action is perfect for us. We're not too proud to dumpster dive for discarded dividends. Let's buy the freaking dip. Wrong advice. If you follow the Bitcoin maxis all last year, buy the dip, buy the dip, buy the dip. Well, they were down now 80% over that down run. So not quite a wise investment strategy. And you really got to know what's performing and what's not performing. And it's all about timing, as you know. So be aware of that. Just don't go with some schmuck that said buy the dip, buy the dip. I mean, it's absolutely asinine to follow that strategy. Anyways, let's see here. uh, the action is perfect for us. You're not too proud to dumpster. Okay, so he says, let's buy the frickin' dip. Executive Matthew, who recently plunked down a $123,000 bet. That's right. A few months ago, Matthew Thornton invested 123 into his stock he knows well, Crown Castle. He's an executive at FedEx by day and sits on the board of CCI. I would consider some form of insider trading. Actually, this sounds legit. Cell tower operator is a landlord for mobile phone traffic collecting rents via its 40,000 towers from AT&T and T and Verizon. CCI is a toll booth for cell phone traffic. Okay, this is something you want to know about because it is a cash flow generator And the nice thing is, if that's the case, everyone's needing to use their cell phone no matter what type of economy you have. So this sounds legit. CCI is one of the three major cell tower landlords in America. It has certainly been knocked down alongside with other REITs. Now it appears quite cheap. CCI yields 4.8% as it ever pays. Okay, that's not bad. It's only hiked its dividend by 49% over the past 5 years, but the market is treated like CCI like a bond and selling off its rates as it rose. Okay, so but no matter what happens in the economy, Americans are not giving up on their phones. Exactly. The economy, this is recession proof. Without, it's like haircutters. You always need to get your haircut done. So barbers are always going to be in the same demand no matter what. Our tendency to stare at our phones all day may not be good for our conversation, but it's great for CCI. That's our cue to join Matthew. CCI rarely trades below its dividend line, strong, yielding 4.8%. We find ourselves on the profitable underside of a dividend magnet. CCI is a growth utility stock that will benefit from a cool down in the rates. Company debt is under control at about 84% fixed rate and only small percentage of the maturing small percentage. Stock dividend growth is well supported by profit. CCI is on track to increase its adjusted funds from operations AFFO by another 4%. It's exactly the type of recessionary proof bargain we want to buy now. So this guy obviously advertises his newsletter or whatever it is. Might be legit, I don't know, but that's a gem to know about. But just don't also remember that Forbes is a pay to play. So if you pay, you can pretend you are featured on Forbes. So do keep that in mind. Also, um, yeah, we'll just if you want to basically know some trading secrets like that we got, just go over to quantlabs.net/books and get our books and a bunch of videos we got as well to show you how to beat recession like this. But this is a good one. We'll leave it at that again. That's quantlabs.net/books. Quantlabs.net/books. Over and out. Have a good day.